Hi, once again, thank you for showing up and seeing this video. My name is Miguel Vazquez, and I'm a reverse mortgage specialist. And a little bit about myself, I've been doing reverse mortgages probably for 15 years now. And the topic we're going to speak about today is probably two of the things that are most misunderstood with reverse mortgages. One is that the bank is going to keep my house, and second, that there's nothing left to leave my children or my heirs if I get a reverse mortgage. Those are the two probably things that recur over and over, and they're misconceptions, and I'm going to go ahead and address them right now. And then at the end, if you have any questions, you can reach out to me. But here we go. Okay, so first of all, reverse mortgage is not out to keep your home. I hear this a lot. The reverse mortgage wants to take my house away, or why are they giving me such a little money when my house is worth? So number one, the reverse mortgage doesn't want your house. They don't want to keep your house. And so that's not what the program is designed for, okay? When you have a regular loan on your house, you have a loan on there, and typically you make payments on that house regularly, right? Each month you make payments on the house. Well, that lender, that bank who lend you that money has a lien on the title of your property. So with the reverse mortgage, it's the exact same thing. The reverse mortgage is a lender, and all they're doing is letting you borrow money and putting a lien on your property's title. That's it. That doesn't mean they own the property. That doesn't mean that they want to take it away from you. They don't. It's a reverse mortgage loan is the same thing as a regular type of loan, a 30-year loan, a 20-year loan, a 15-year loan. So it's exactly the same thing. It's a loan, okay? The only difference, though, with the reverse mortgage is you're not required to make monthly payments on the reverse mortgage. Where on the traditional type of mortgage, you would make interest payments and a little bit of principal on your monthly payment month after month. So that's the difference between the reverse mortgage and the regular type of mortgage, that on the reverse mortgage, you're not required to make the payments. You still are required to make your taxes, property taxes, and your fire insurance. Those you do have to still make. The other thing that you also have to make sure that you do is you have to keep your property up. You can't just let it dwindle, and you have to at least keep it up to a minimum, okay? So that's one thing, okay? So on a regular mortgage, if you were to sell the property or leave it to your heirs and they were to sell the property, they would sell the property, get the money that from the sale. From that money of the sale, they would pay the balance that's owed on the home, and then they would just walk away with the remaining proceeds. That's what would happen on a regular mortgage. Well, on a reverse mortgage, it's something very similar. If you were to pass away, or if you were to sell the home, or your heirs were to sell the homes, they would put the property up for sale, get the proceeds from the sale, and then pay off the reverse mortgage balance. And then your heirs or your kids or whoever you leave your house to would keep the remaining proceeds of the sale. So that's very similar. The one advantage of leaving your property to your children or an heir or a friend or whoever after you pass away is that they actually don't have to make any payments on that loan because it's a reverse mortgage loan. The reverse mortgage gives your children or your heirs 6 months to go ahead and put the property up for sale, and after they sell it, they get the proceeds and then they pay off the reverse mortgage balance. Now, the reverse mortgage gives them 6 months to do that. So in 6 months, they don't have to make any payments. Now, if they can't sell the property in 6 months, your heirs or kids can request an additional 6 months extension, and the reverse mortgage company would grant it. And so now you would have a total of 12 months without making any mortgage payments, or your children having to make any mortgage payments. And then they would have enough time to either sell the property or refinance into a new loan and then pay off the reverse mortgage balance. Okay, so that's one thing. The reverse mortgage is not out to keep your house. Okay. Second thing, now let's talk about the other concern that many homeowners who want to do a reverse mortgage, their concern is like, well, if I do a reverse mortgage, I'm not going to leave that much. There's not going to be much left over for my children for them to inherit. Okay, so let's talk about how that plays out. So let's imagine that you have a house that's worth $600,000. Your property is valued at $600,000, and then you owe $200,000. So you owe $200,000 to the bank, and then your house is worth $600,000. Okay. Now let's say that you get into the reverse mortgage. The reverse mortgage says, okay, you know what? We'll give you $200,000 to pay off your existing mortgage balance that you have with your regular loan. We'll lend you $200,000. You can pay that off, and now you're in the reverse mortgage program. Now you don't have to make any more payments on that. Okay, so that might be a savings or not coming out of pocket for not having to send the monthly payment of $1,500, which is a lot of money for someone who's retired, who's only on Social Security or a pension. The $1,500 that they don't have to send in because now they're in the reverse mortgage makes a big difference in terms of their lifestyle, in terms of having the ability to pay their bills, being less stressed out, and at the end of the day, living more comfortably towards the end of your life. Okay, so that's a huge advantage. Anyhow, so let's say that you're in the reverse mortgage and they lend you the $200,000, you paid off your regular mortgage. Now you owe the reverse mortgage $200,000. Your property is worth $600,000, right? 10 years pass by, you haven't made any payments to the reverse mortgage. Now, this is not a free loan. The reverse mortgage is not a free loan. They lend you $200,000 for this example. Each month, they're gonna be charging you interest rate on that $200,000 that they let you borrow. So let's imagine that each month the payment was supposed to be in interest $1,000. So each month that would pass by, you owe $1,000 more. So after the first month you owe $2,100, and then the second month you owe $200,200. Sorry, $202,000. And then the third month you owe $203,000. Okay, so let's say that after 10 years you haven't made any payments. Now you owe the reverse mortgage balance, or the reverse mortgage balance has increased from $200,000 to $300,000. Okay, that's a lot of money that it's gone up, the balance. Okay, so now you owe the reverse mortgage a total of 300,000. That's pretty scary for a lot of people. But remember, you haven't made any payments on them. Now, if you wanted to make payments, you could make payments so that the balance doesn't go up as quickly. But you have that option. You could or you could not if you don't want to. It's up to you. Anyhow, a lot of people get alarmed because they're like, wow, it went up 100,000, so now I owe the reverse mortgage 300,000 after 10 years. But let's also remember that 10 years is a long time. And so if your property, when you first got the reverse mortgage 10 years ago, was valued at 600,000, 10 years later, it's probably appreciated a significant amount. Instead of it being worth 600,000, 10 years later, now it's probably worth 750,000, 800,000. Okay. So now, yeah, your balance went up because you haven't made any payments on the reverse mortgage. But guess what? The value of your property has also gone up too. So you really haven't lost any equity there. Okay. What happens, let's say that you pass away, and then you leave your property after 10 years to your children, your heirs. And remember, now the property is worth 700,000. You owe 300. So let's say they inherit that property, you pass away, they put it up for sale, they sell it for fair market value, which is 700,000. They get the proceeds of 700,000. They pay off the 300,000 balance on the reverse mortgage, and they end up keeping the remaining 400,000. Okay, so that's the other misconception that we wanted to address, that just because you get into a reverse mortgage doesn't mean that you're not going to leave anything to your children or your heirs or whoever you're going to leave the property. Okay, sure. It's a pretty simple example. I understand that values go up and down here in California, but if we take the last, I don't know, 60, 70 years, we know there's an appreciation of about 4%. So that means in the long haul, even though there might be a dip or a couple dips, after it's written out, that the value recovers. Okay, and with all the ups and downs throughout history, there's been a net appreciation of like 4%. Okay. Anyhow, I hope this video has answered those two misconceptions about the reverse mortgage trying to keep my house. They don't. And secondly, that other misconception that you're not going to leave any money to your heirs if you get into a reverse mortgage. Hopefully that sounds clear. One other thing that I did want to address, if
it's 11 o'clock.
If the reverse mortgage, if there's enough equity in there, you might also be able to borrow some money. So in addition to paying off the 200,000, maybe the reverse mortgage will give you 300,000. And so you pay off the 200,000, you keep 100,000 for yourself, use it for paying off bills or what have you. Again, it's not a free loan. They're going to charge you interest rate on there. But what I wanted to make with this point is that even though they're giving you 200,000 to pay off the existing mortgage and then 100,000 cash out, you're like, well, they're only giving me a total of 300 versus my house is worth 600,000. Well, you know what? They can't give you all of it. Okay. First of all, because they're not buying it off you, they're just lending on the property value. And so generally speaking, they will only lend about 50% of your property value. So if your property is worth 500,000, the max they'll lend you is 250. If your property is valued at 600,000, the max that they'll lend you is 300,000. So anyhow, if you have any questions, please feel free to call me. My phone number is 562-881-9811. Sorry, the gardeners out there. I apologize about that. But if you have any questions, you can go ahead and call me or text me 562-881-9811. You can also send me an email, Miguel at homecentralfinancial.com. You can also log on to my website, www.reversemortgageplus.net. reversemortgageplus.net. Okay, thank you very much for listening to the video. Also, if you can text me or email any questions if you also want to get qualified or find out more about reverse mortgages, please let me know. For my reverse mortgage clients, I also do house calls. So if you need me to go to your house or your parents' house or the client's house, I'd gladly be able to go over there. I work on weekends, evenings, holidays. So if you need me to go over there to your house, we can set up an appointment, and then I will go over there and explain everything and answer any questions that you might have. Okay, thank you very much. Have a good day, and bye-bye.